Okay, good morning, students and team members from around the world. Welcome to workshop number 4. Great interactive session planned today. We'll tell you about the instructors shortly. If you haven't added your team name, please do that. We might be doing breakouts later. JP, plan on the way or not?
Do you say plan on the way?
No, are you planning breakouts?
Yes, we'll be having a split breakout, and I'll go through some of those details as we get into the program.
Awesome. Good deal. So all of you know me, but I'm just putting up my contact info just in case. We'll be watching email and for me, etc., just in case. But certainly the chat room's the easiest place to put it on. And then the wizard behind the curtains, doing anything you need technically and or any other requirements, again, put it in chat. He's also got his SMS text number here on the page. By the way, he'll be doing exactly this role when we're running the competition in mid-September. Okay, I mean Sutherland. So I'm going to cover a couple of minutes of stuff about the Pitch Fest and Startup Bootcamp that will be the optional workshop. We have been assigned all the seats we requested, so yay. I'll cover that very quickly and then turn it over for the bulk of the time to our instructors who are from Atlanta and from Jaipur, India. So we'll introduce them in a minute. What I'm hoping you will do is out of that, learn to up your game by not taking away 15 things to do, but just a small handful that you can then rework or consider how to continue to hone your own pitch, not just for the competition, but just as you, in fact, go out to raise capital. You'll see a number of sources covered by JP and Mahavir, and more importantly, the things you've already got, you'll reinforce. And then at the end of our session, we'll stay on, cover anything you want. We'll end promptly, but leave it open for any continued Q&A on an informal basis. We are at 15 teams from around the world. In that regard, one team from DC said they think they're not ready, so they're going to come back next year, which is marvelous. And in fact, all of you, if you're still in school or will have graduated in calendar 2020, you're welcome to come back with the same venture or a different venture. We want to help you on your entrepreneurship journey. The things above the squiggly line are now all on your calendars, and at this point, there are no grace periods for being late for anything. We have the last workshop today. We have one last info call next Thursday, where you can ask questions, particularly about these scoreable items, the business model canvas, the business plan summary, and for JP and Mahavir's benefit, those are scored 10% each, and the actual pitch competition with Q&A is scored at 80, which will be occurring September 12th for the semifinals and 13th. For the students, since all of this is in the shared folder, you can now start registering. You can have your friends and family register as well. We need to know who they are so we can send them the Zoom link. All of the details are on the registration. It's here on the bottom. We'll be covering these again when we meet on Thursday, okay? At any time, break in with a chat question or let me know. The one other item to tell you is that we got 22 seats for, so every team has at least one, and most teams have 2 seats. I'll show you that shortly. It'll be held the 2nd or 3rd, depending on where you are, because the times are a little different. I am being told, and we'll cover this again on Thursday, that if they don't get enough attendance, they may only go with cohort B. So while we've requested seats that I'll show you shortly in cohort A and B, it's a 3-hour workshop called the Silicon Valley Startup Bootcamp. You can find all the details at this particular link. And then the seats that we've been given are as follows per the 22. If you're not going to use one, you got to tell me by this coming week. In fact, I'm going to ask for a reconfirmation email today from every team. Currently, you're all put in cohort A and B. They may tell me during the week that they're down to just cohort B. The details about the bootcamp are up here. They're going to let me know how folks will register. So I'm asking for team captains or a designee to reconfirm on an email today. You know my emails, you get plenty of them from me, or latest by Monday morning. And then once you say you're coming, you need to attend. If a team member's ill or whatever, just have a standby because we got to use the seats. There is a charge otherwise, so please let's use them wisely. And in that regard, I'm pleased to tell you we're about to kick off workshop number 4. I know you asked Blake Patton a couple of Saturdays ago, lots of questions today. I think you'll get an even deeper dive because last time it was looking at some of your detailed financials through your spreadsheets. This time you're going to hear a couple of experts who deal with a number of ventures in various stages, what they hear, what et cetera. So let's make it very, very interactive. And before I kick that off, I'm going to kick off a couple of polls. So get ready with your keyboard. And I'm going to do 2 questions in poll number 1A and 1B. And here they are. I'm launching the poll. So you have about 15 seconds to read both questions and answer with a scale. Questions should be pretty explanatory. How confident are you about your pitch that investors would absolutely write a check soon after? And then question 2 is, after your pitch is over and you had some Q&A with investors or judges, how confident are you in regard to that as well? What's your confidence level? And I see only about 10 of you have voted. So, and David, even though I know you're a mentor, you can speak for the team. So feel free, irrespective or if you're a chapter leader, you're welcome to answer. And I'm going to do a countdown at this point of 5, 4, 3, 2, 1. Okay, let's see the results. And here we go. In terms of question 1, I believe, hopefully you're seeing the numbers with me. Most people feel pretty comfortable. 4 out of 5, JP Mahavir. So you got a job cut out to reinforce and give them some new news. I will tell you every single time that has happened. So I'm pleased. But there are 3 members here who feel highly confident that they can get investors to write a check in some fashion or the other. And then in terms of answering any questions that judges or investors threw out of them, pretty similar kind of scores. So the good news is mostly 3s, 4s, and 5s in both questions. JP Mahavir, any questions before I kick it off with your slides?
No, we're all set, Paul. Good, looks good.
Great. Okay, with that said, I am going to turn it over for the next couple of hours for a session called What Investors Look For. I think you'll find it extremely interactive. I'm going to stop sharing in another 30 seconds. JP will pull up their slides. They'll introduce themselves. JP and Mahavir are good friends. JP will tell you a bit about himself. He also is the current president of TiE Atlanta. Mahavir has a lot of roles he plays in Rajasthan, across India, and then this year, and maybe even next year, he'll tell you he's the president of TiE Global. So with that, gentlemen, take it away. Thanks so much.
All right. Okay, so I've been teaching, not as long as maybe Paul, but I've been teaching about 16 years. So I know how to pick on people really good in all my classes. Because in the last 16 years, we went from no smartphones and not that many even laptops to everybody texting while they're in class. So I'm used to the whole virtual class session and trying to keep people's attention. But what I'm going to do, which I don't know if I'm sure you've gone through 1,000 different online courses by this time, is really ask you guys questions. So I look more from a case study method, which is getting you guys to tell us how you're thinking about presenting and thinking about these constructs, and then making sure that Mahavir and myself can fill in the gaps as we kind of go through it. So I want to call out on pretty much everybody on this list. Would love to hear what company you're with and which chapter or where in the world you are. So I'll go down my list that I've here, and I apologize in advance for constantly mispronouncing names in advance. So is it Saray or Saray? Are you there?
It is Sarai.
All right. Could you tell us a little bit about yourself and where you're coming from?
So I'm with LSK Technologies. We make a small portable device that can diagnose infectious diseases, and we are associated with Toronto chapter.
All right. Fantastic. Shreyas? Shreyas there? I see you. There you go.
I'm Shreyas.
Can you turn your microphone volume
India.
up?
Okay. Is it
All right,
audible?
go ahead.
Okay, so I am Shreyas from India. We Clean Electric are working on electric retrofitting kits and platform on light commercial vehicle electric architecture. So our main focus is like to work on light commercial vehicles and to electrify it, as well as build some existing platforms for providing the solutions.
All right.
He's from Mumbai, and he's from Mumbai.
All
Chapter.
right, fantastic.
Yes, yes.
Aditya,
Hello, James.
go ahead. Tell us where you're coming from and what's the
Sure.
company and what's it
Sure.
about.
Sure. So James, we are from IIT Hyderabad, representing TiE Hyderabad chapter. We have co-founded Franks, which is a deep tech platform enabling high growth food and hospitality industry with state-of-the-art technologies. We are building a suite of products which will help them drive increase in revenues and margins. And we deploy AI and computer vision solutions to help them manage their operations, expand real-time hygiene monitoring, and curb the contamination risks.
Very good. Ankit?
Hello, hi James. So I am Ankit Joshi from Clean Electric. So we are from TiE chapter Mumbai. So basically Clean Electric is working on some futuristic light commercial vehicles. So we are working on some electric truck, which must be a smart truck, just as our smartphones, with a greater performance and great reliability. So we are working on this.
All right. Did I call on Anand yet?
Nope.
Anand, are you there?
Yeah, I'm there. Aravind.
Go ahead, tell us where you're coming from and what's your company?
So we are coming from a place called Bangalore in India, and we are from TiE Mysore chapter.
No. Satish, he's talking about Anand Tiwari. Your turn will come. I think Anand, I can see you also.
Yeah,
Anand.
Yeah, Anand is a chapter leader in Denver. I don't know if his team has joined, but Anand, maybe you can still speak for them for 20, 30 seconds.
Sure, yeah. So I'm from TiE Denver. And the company we selected here is One Kind Cup. It's if you see a regular cup at Starbucks, you can recycle the cup part, but the lid and the straw still goes to trash. So they're trying to target that problem, and they want to solve that. So they have a cup which comes with a paper straw, all in built, one package. You use it and then throw it. It's biodegradable and all that cool stuff. So that's the problem they're trying to solve.
Very cool. Ankit? Did I already called Ankit?
You know what? If you want, I'll go around the screen for you. Up to you.
No. I've got the list. I mean, I'm literally looking at the participants and I'm calling them in order, so on my screen. Go ahead, Ankit. Did you already speak?
Yeah, he already went.
Okay, Sharik?
Yes.
Go for it, Sharik. Yes.
Cool. So I'm the founder and CEO of Ambi from TiE Silicon Valley. Ambi helps small businesses legally play licensed music in their stores. We are the only platform on the market that is free forever, and we integrate with the existing ecosystem in the store to gather vital business data and use that data to lift sales 9% by playing the right music and playing the right messaging in store.
All
And
right.
if you didn't notice, you got to listen last week to Vikash's class on how to tell everybody anything while the elevator is going from the top floor to the bottom floor.
Perfect. Devinish, are you there? He was there earlier. Dharmya?
Yeah.
Dharmgya.
You're going to need to unmute. Yeah.
Yeah. So I am also from the team Franks. Hello.
Go ahead.
Go ahead.
Yeah. So I'm also from the team Franks. So we are targeting the most inefficient industry worldwide, which is the food service and hospitality industry by McKinsey, and we are making we are trying to make money from making that industry efficient by our suite of products, which is the tabletop ordering services, tabletop ordering system, the restaurant management system, and the Hockey. Hockey is basically the food safety and hygiene monitoring system, from which we take the live CCTV feed and we run our AI and machine learning algorithm on it, and we give them the results.
All right. Hardik?
Yeah, hi. I'm Hardik, founder CEO of Solar Critics, which is a crowd investing platform for fractional tokenized ownership of solar panels. We are representing Dubai, a TiE Dubai chapter.
All right. Let's see, is Manan, are you still there, or did Manan leave? Manan was in, and Manan is gone. Okay. Omar.
Hello. Omar representing Radom, TiE, Oregon. We're building a platform to bridge parking providers with commuters, helping parking providers manage their facilities and helping commuters get directed to an exact parking spot so they don't have to look for it.
All right, fantastic. Prashant, you still there? Prashant is no longer there. Okay. Livia.
Hello, I come from LSK Technologies. I think Sarah already did our company pitch.
All right. Somebody got some background noise. Thank you. Is Jay still there, or did Jay leave? Jay Rana.
Yeah, I'm still here. I'm from the New Jersey chapter. I'm part of Team Volant, and basically what we're trying to do is create a mesh network of drones to extend drone connectivity over a long distance for military applications.
Very cool. Praveen, still there? Praveen Yadav?
Yeah. Hi, I'm Praveen from Team Clean Electric, and we are building electric vehicles which will be more reliable and will have better performance. Basically, we will be saving the fleet owners and drivers a good amount of money, around 20 to 30% savings. And I am from TiE chapter Mumbai.
All right, fantastic. Satish, are you still there? Satish?
You're on mute, Satish.
Yeah, I'm there. Hello.
Yes, we can hear you now.
Yeah. Actually, I'm Satish Aravind, and I'm representing Last Triple, and we are coming from Bangalore, and we are from TiE Mysuru chapter. So, talking about Last Triple is nothing but we plant trees in memories of each pets which is there in Bangalore. Being a major pet centers in India, Bangalore, Hyderabad, Mumbai, and Delhi are being the major pet center. So we are confined our operation to these 4 cities as of now. and we plant trees for each pet's death with their name on it. If for example, say a pet named Alexa died, and we will plant we'll plant a tree in the name of Alexa in a place called Kabban Park in Bangalore. And we have planted about 150 plus trees, and as a proud volunteer, I'm happy to represent here. Thank you.
Awesome. Thank you. Sean?
Hello, everyone. I'm a representative from Radom. We're coming out of TiE, Oregon. We're bridging the gap from commuters to parking facilities to provide insight on available parking at your next destination. We're a B2C and B2B startup, so we're helping businesses increase operation and financial forecasting, along with commuters to lower their commute time.
All right. Sharik? Sharik, I have, I think, two.
It's his phone,
phone and laptop or something. Sharik, are you there?
Yes, I'm here.
Go ahead.
I believe I already went.
T-Manby, Silicon Valley.
Yeah, I already
okay,
went.
Okay.
Right?
I think what threw me off is I had your name twice on this list here on Zoom. So my apologies for that. No problem. Let's see. Sushant, are you there?
Yeah, hi, James. Am I audible?
Go ahead.
I'm from ITBHU, TiE Electric, and TiE Mumbai chapter. So we are currently making electric vehicles.
Okay, Tushar?
Yeah, I'm from the same team that Sushant was in, from the team Clean Electric. So what we are doing, we are retrofitting diesel vehicles and converting them to the electric ones. So basically we are going at twice the speed, like eliminating diesel vehicles plus adding electric vehicles. So that's why we are retrofitting instead of manufacturing from scratch.
All right. Victoria?
Hey, I'm Victoria from Aerodyne Technologies. We're based out of TiE Atlanta. And our product is an aerodynamic improving device for tractor trailers so that fleets can save money on fuel.
Very cool. Akash?
So yeah, I'm also from the same team, Clean Electric, and we are building electric trucks along with the charging infrastructure to provide a turnkey solution to the fleet operators and businesses.
All right, Lauren?
Yeah, I'm Lauren Barnes. I'm from TiE Denver. My company is One Kind Cup, which is a one-piece disposable compostable cup, straw, and lid combination.
All right. So I went through and I know a few people jumped on and jumped off while I was actually going through this list. Did I miss anybody? I know also David Smith is your coaching, right? Could you maybe give a quick intro?
Yes, I'm David Smith. I'm a mentor for Radom, and I'm of the TiE Oregon chapter.
Awesome. Did I miss anybody else on the list? Anybody else out there? Well, that was a good start. I think it's always fun to hear what's your first pitch and how do you pitch yourself. And we're going to be going through that a little bit. Let me get my screen shared here.
And
can
all
you guys
these
see my screen?
Our slides are in the shared folder, so you can access them later.
Perfect. Can you guys see the screen?
Yes.
Yeah, we can.
All right.
James,
So,
can I just before you introduce us, can I add something?
Please.
You know, just because the topic is what we are looking for, JP and I were looking at how you introduce yourselves, how you spoke a line or two about your process. Some people fumbled, some were very precise and to the point. You know, when you're walking in corridors, elevators, around pitch competitions, you just need, or writing a LinkedIn intro for one line, This is, you have to practice this 2 lines, 1 line, 3 line to get my or get JP's attention. Don't think that you will get 20 minutes, 30 minutes or more. These 2 lines are as important for you to put a step into my office even before your pitch deck or your idea has any value. So practice this. You need to, and I'm sorry, but many of you were not up to the mark. Quite a few were very good, but I think you need to. So this is where your classes start right now, even before we're introduced. Very important these 2 lines are, and I'm glad JP did that. This is just to gauge what you were doing. Thank you, JP. Go ahead.
Well, I'm going to put it back to you, Mahavir. Could you give us your pitch? Who are you? Tell us, everybody, your background and your story.
Yeah, sure. So I'm Mahavir. I'm from Jaipur, India. I've been part of TiE for over 20 years. I'm a successful entrepreneur, and my motto has always been diversified businesses, diversified sectors, and I have succeeded in most of what I've done. Tech has always intrigued me, and because of TiE, I'm now a full-fledged angel investor without any technical knowledge or formal education. I can actually learned a lot about every sector, every domain, and have been angel investing for the last 6 years. And I'm proud to have been part of TiE's mission to foster entrepreneurship, lead it in many roles, and now as the chair of TiE Global. And I look forward to angel investing and growing this sector from here thereon. Thank you.
Awesome. So you can see the screen and a few of my bullet points, and Mahavir is absolutely perfectly correct in his comments, because communicating who you are in a way that's impactful, but also shows humility, something that's an exciting story, that people want to join your adventure. It's all important how you communicate that. Now, I've written some stats here, which are all true, but it isn't what my story is all about. And none of us who are entrepreneurs, that's our story, our stats. I always say that's a symptom of it. Really, I am really good at what I call the living nightmare, which is getting the company from idea up and scale. And then I kind of like either relax or go do something else, and I get preoccupied to go back to my living nightmare of starting a new company. That being said, I love starting companies from baby all the way to large, but I typically stay in the small cap sector and micro cap, mainly because that's where I think a lot of the value creation is, one, exciting, and you can really put your thumbprint on whatever company it is. That being said, I'm going to tell you something that sounds odd, which is I'm not a fan of startups. What I am a fan of is what I call ventures. Now, a startup, in my opinion, is whenever I was getting started. You know, I had my first company, which was at 12 years old. The internet had just started, and I was a volunteer at my local library. And I said, nobody's using these computers. Nobody knows how to use the internet. I know how to use it. I like playing on computers. Maybe I could teach a class. So they advertised my class on learning how to use a computer to the public area. And we had students that came in from 40 to 83 years old. And that was my first taste of giving back and creating value and scaling it. So about a few months go in, and there's a lady, Wanda is her name, and she comes up to me and said, "What are you getting paid?" And I said, "I'm just a volunteer. I just am here to help out." And she said, no, go back home and find out, what does a person who does computers get paid? So I think I went back, and I think like some software developer at the time was like $60 an hour. So I said that, and I went back to the class. She said, it's a little too expensive. We'll figure something out. So a few weeks go by, and she ends up giving me an envelope. She said, just open this up at home. So whenever I opened up the envelope, it was $30 per person for the 1 hour class that I taught. The class got to about 30 students by the time I was in high school. So I was pulling in over $1,000 a week teaching classes. So this big aha came to me of, what is this concept of scaling value? And that's really what this whole process is about, of raising capital and how you can communicate that story of scaling that value. But for myself, I have built a whole bunch of different companies. I love what I call tech-enabled businesses, meaning companies that are old, that are archaic, that don't use a lot of technology. How can I add technology in there to automate processes, use data analytics to really capture intelligent value from the company that they've already got created, or for the companies that I've created. I've got one big company right now that's focused on consumer lending in the US marketplace, and we'll be scaling that out all across the world. But I've got a huge background in finance and capital markets. But I'll tell you, I'm really not the finance guy. I'm the entrepreneur like Mahavir. We get teams of people together that have that expertise to bring their expertise and kind of be like a conductor in a way, but we get our hands wet in everything, every single detail. And that's what I think is the most exciting part of this whole journey. Okay, so Mahavir, I slipped this whole slide in here right before I got online, but what I really want to go back to you guys is a Socratic approach. I want you guys to answer these questions for yourself and how to think through the psychology. So I know if you went to Blake Patton's presentation, I'm sure it was super detailed on institutional investors such as venture capitalists and how they're looking at the process. And there's a lot of similarities between this presentation and that. But what I want to do is have Mahavir tell a little bit about how his perspective was in this whole process and how we've both been able to approach it. So Mahavir, I know you've got a whole bunch of different experiences in different companies. So can you tell us about maybe one of the companies that you got started did you raise any angel capital? Did you get any friends and family to invest in you? How did you get that initial amount of money for maybe one of the companies you could tell us about?
Basically, when I started early, about 30 years ago, I had zero capital. And, the only way to go forward was to get financial institutions to fund you at that point of time. But without collateral in India, that was virtually impossible. So my only way to have some traction and to make a point that I will achieve what I will in the next 1 year, I had to actually borrow money and take, pay interest on what I was paying. But the key thing that I did was I wanted my operation cost to be less. So I said, I can't afford to pay you this high in interest rate. Can I offer you a lower interest rate and an upside? If I make profit, I give you more of what I can. And that's what I gave. And I gave them a stake. So it was an initial stage of a venture investment kind of a thing that I had initiated back in the early 90s, late 80s. And that is what has stuck with me. That first investment that was made, obviously, he ended up making a lot of returns, but the entire sectors that I have grown into, I have invested into people, I have invested into what their experiences are, and I have put in the money for what they have put the hard work for. And I feel that that's the most critical thing, and that's my experience that I come from.
Fantastic. I'll tell you about my latest company. One of the companies is called Leap Credit. It's a consumer lender. And, I remember one of my employees very early on said, why everything seems so easy? Why is it so easy to build this company and raise the capital? Those of us who had been doing it for 20 years plus kind of laughed and said, well, we went through this nightmare over and over and over and over again. And finally, after decades of trying and figuring out how to make this thing work, it seems easy. And that's really what a lot of people you guys need to understand, and what I need to understand, which is that you're not going to get it down perfect the first time. So a lot of it has to do with practice and consistency. So if you go all the way back to whenever I was just getting started, the first person I asked money for one of the investment companies that I was starting was my dad. Now, I really, if you know anything about, old school Indian dads who happen to be in the Navy, they're a little strict, and raising money wasn't really the thing to do, but he gave me a little bit of money. I think even to this day, he still asks, what percentage that does he own? I said, I thought I paid you 3-5x long time ago. But that audience, your parents, your uncles, your aunts, your friends, I had an entrepreneur come to me, a young female entrepreneur. She said, hey, I'm trying to raise $500,000 for my new startup. And I asked, well, how much have you raised so far? She said, well, I really haven't raised anything. I said, so are you saying that you haven't put any money? She said, oh, I put, a few $100s in. Okay. I said, okay, that's fine. Now, have you asked anybody around you to put some money in? She said, no, I need $500,000 check. Well, I can tell you from personal experience, and Paul can tell you, and Mahavir can tell you, getting the check is not how you get the amount of money you need. It's talking to people that already trust you as kind of that first layer to give you a small amount of capital to get the ball rolling. And so much of it is just trust. And I'll tell you, TiE Atlanta, the entire TiE ecosystem, I wish I had this. I can't even dream of having this for my first companies, because the ability to create trust comes through consistency of relationship and how you treat the other people around you. Now that sounds very obvious, but if you're going to be asking a person for money or a significant amount of money, have you been putting the time, effort, and energy into that person consistently? One, to build a relationship, provide consistency, show that you're going to be trustworthy and reliable, so that them writing an amount of money is not really a hesitation, because they believe in you and your ability to take that and create something from that. Mahavir, any experiences like that in any of the companies?
Yeah, exactly. So, I totally agree with what you were saying, JP. The idea, I really love it when we are being pitched for fundraising, and they say this idea is great. The market size is huge. All these slides show you the moon, and our growth for the year or two will be great. And then when say, okay, great, you need 500,000. Can you raise 50,000 from friends and family? They cannot do that, or I cannot. So if you are not able to sell the idea to the next person who's living with you for the last so many years, and you're telling me your ideas will be validated, will have the growth, will have the market, will get X percentage of the market size, it somehow throws us off the track. You have to understand, many a times it doesn't matter if you can get money. It doesn't matter if it's 5% or 1% or 10%. It's the confidence that we see in you to raise that money, because every pitching will not lead you to investment. You have to pitch 20 places, 30 places before you get some synergy, because we as investors look not only at an idea that will succeed, not only at the team that will make it succeed, but also where we can contribute. People who are entrepreneur investors, as JP said, we need to sink in with the idea. We need to sink in with the team, that this is a team, this will work with us as entrepreneurs. No, we are not passive investors. All angels, all entrepreneurs, they are very active investors. They want to stay involved. They want to mentor, help, guide, and that's when they invest. So there's lots of synergy that has to happen. So what I'm intending to tell you is that if you can't sell your idea to your family, your immediate friends, your school and college mates, or not be able to do a crowdfunding of sorts, or do bootstrapping with all the co-founders for the time being, your chances of getting endorsement for someone you don't know are far lower than what they should be.
Absolutely. And let's see, one of the questions here, let's say that trust has already been established. How in depth should you go into the venture to potential friends and family investor? Great question. So with angels, high net worth individuals, ultra high net worth individuals, that's what those acronyms are, and friends and family, end of the day, they're probably not going to be the expert in your industry. They might be, and you might have somebody who is, has already successfully built a company in your space, which is ideal. You need to get those mentors, but more often than not, they may have no clue what it is that your business is. So much of it is learning who they are, what they're looking for, asking them questions to understand what their thesis is for investing before saying, hey, do you want to invest in my company? there needs to be an alignment with what you're looking for, who they are, connecting those dots so that there's a flow and a relationship that is being built over time. And that's the other thing. I literally cannot imagine how much money I've raised. You can't even put it in a pile. But the reality is, I know all the relationships that I've built, and I'm very consistent with it. So all of us have some kind of social media, right? Whether it's LinkedIn, Instagram, Facebook, whatever. So for not only my companies today, but the companies in the past, I've got this huge list of relationships. And the key is I am investing in them as much as they're going to invest in me. So somebody might have an interest for, playing golf or playing tennis, or they've got kids, or they've got, grandparents. Whatever it is that their life is, just like you would have any relationship, you need to know who they are and have a vested interest in their lives. So it could be, I don't know, if you go out and drink or eat dinner or whatever, inviting them as part of your life is how you build a relationship. And that's why I wrote that point. Investors are people too. Mahavir, can you tell me or tell us, have you built any relationships with any of the people you've invested in or have raised capital from outside of the business itself?
I mean, the networking is key. Relationship building is key. Whatever I think you, me, or Paul are today is because of the network that we work along, the goodwill that we have, the intent, how trustworthy we are, how professional we are, and how the use of words from being firm, authoritative, yet humble, focused, and aligned with what we are doing. I mean, all these things are traits that we need to have, imbibed in us. And that is what creates relationships. That is what creates trust. And I think all the investments that I have made, or all the money that I have raised as a co-investor with other people has been based upon, oh, are you the lead investor? I would love to invest. That confidence only comes because of your track record, your follow-up, your intention, and all the other things that you've listed on this slide. They absolutely have to fall in line. Otherwise, you will be a lone person seeking investment or just investing or not being needed by the team that you have invested in. All three cases.
So that next phase, that was a great question, which is so much of it that initially what like Mahavir was talking about is more the relationship and them generally understanding the concept and the model and the pitch. They're not usually going to be a technical expert within your field. You should be the technical expert in your field. But when you start getting to a family office, it's the dynamics start to change. They're not going to be an institutional investor, and we'll get to that. They're not going to be super advanced, but they've got a pool of capital, typically with one or multiple families. Maybe they sold a business and they pooled all their capital to write bigger checks. But this is where there's typically a manager involved or a financial institutional money manager that is going to start making some of the decisions on allocation. So you need to kind of know what that is. So Mahavir, can you tell us a little bit about what is a family office and how should we be approaching a family office if we're raising capital for our company?
See, I think what I feel, a family office or, having financial institutions reach out, you have to have a cohesive team, a cohesive family, technology, finances, compliance, operations, marketing, sales. That's what a family constitutes. If you look at a small family, every family member has a role defined. And similarly, your immediate family, which is your relatives and friends, and also the co-founders constitute a larger family. And this creates a family office where everything is comprehensive, everything is workable, and that's what's needed. So you really need to have your team in place, your support systems in place, and that's what would help investors give confidence in what you can deliver or the team can deliver. And that's what creates a very, very trustworthy relationship. JP, we can't hear you.
Oh, sorry about that. So I've worked with a lot of different sizes of family offices. So you've got family offices that may be small in the tens of millions, and then you've got much larger ones. I got to actually work with Vulcan, which was started by Paul Allen, who is the one of the co-founders of Microsoft. That's measured in the billions of billions, tens of billions as a family office investment firm. So the size and scale and sophistication of a family office can widely vary. So just like Mahavir was saying, is the more sophisticated you are, the more sophisticated family office you can approach. One of my friends, he started a firm called Patstone. They've grown. It's a multi-family office manager. They manage, I think, 200 or 300 different families' money in a pooled investment type structure and money management. But they now have 7-8 billion under management. And so when we're pitching them different deals, the deals have to be institutional ready. But a small family office, I mean, I've got a good friend who played for the NFL, is a Hall of Famer, has made a lot of money. He has his own family office. He's got one small manager, but it's just his assets. So the level of sophistication is a lot lower, and the threshold is going to be more similar to an angel investment firm or an angel investor that I would be working with, more on the relationship side. That being said, you'll get into situations where your friend or your buddy who's the entrepreneur investor says, hey, you know, go talk to my manager. So you go talk to your their manager or the financial manager, and they're like, oh, well, you don't have all the due diligence, you don't have all the audit, you don't have all this other stuff. And what you want to do in those kind of situations is don't give up. Those types of individuals are there to protect the assets of that family, right? What you need to do is give them what you can, but you got to go back to the investor entrepreneur and say, hey, you know, I know you want to go through this whole process, but the reality is we're at this stage of the company. If you're excited about the company, look at investing a smaller amount with us and maybe a larger amount as we scale up. And that's where you can kind of bridge the gap. I've had to deal with that a lot over the decades. And it really makes a difference that you have a pretty strong relationship with the entrepreneur, regardless of the money manager who's going to make the yes, no type decision. Don't worry so much about them. They need to check their boxes. And that's just what their role is. Don't get intimidated and quit that's because of that process. Okay. Final thing before we take our first conversation with everybody is VC institutions. Now, you may have already talked with Blake. You know, Paul himself has helped start a VC fund. I have my own private equity institutional investments over the decade. And this is where it becomes a lot more formal. So Mahavir, can you tell us a little bit about what's smart money versus dumb money? And should a VC be in the smart money category, and who should you be working with?
I think smart money is always critical. I think I would take lower valuation. I would take lower money, but from a smart investor, whether angel or VC or institutional. I think your partnership or your investor has to be very, very smart, smarter than you, if that may be the case, as a team, if not as an individual. I think you know, you have a choice, and that's why where you need to understand what does your audience look like, what does an investor look like. Your research on the investment PE fund to VCs to angels has to be very, very critical. Is there synergy? Is there alignment? Is this person going to take you to the next level or the next round of funding? All these things are very, very critical. I mean, I would turn down any amount of money if it was coming from a person who's not, who's just a passive investor, who would not contribute to the growth of the company, who would not help me in the next round. It doesn't work for startups. You need to have smart money always, and that's the most critical thing. And no matter what stage or what level funding you are, but that's very, very important. You know, and I give this very famous anecdote. We are all born to parents, and we can't change them because destiny had that. But choosing a co-founder, choosing an investor is like choosing your brother, sister, or a parent. Investors are almost like mentors and parents. You have a choice in your life where you can choose your siblings and your parents, and that is where you have to be very, very critical. And they have to complement you. They have to be better than you. They have to be at par with you, and they should be, strong enough to take you to the next level. Otherwise, it will not help, because you and them will be struggling at a later stage. That's what I've always felt, and that's what I think.
Mahavir sir,
yeah, go ahead.
Go for it, Akash. Go for it.
Yeah, Mahavir sir, I have a question. Like you, in your earlier comment, you said that if you cannot convince your family, then it is difficult to convince an investor. So I have a thought process that anyone should be self-independent and self-reliant. Why he needs the help of his parents when he is not confident enough to go to an angel investor or anyone else and convince him about his thing. So if I don't want to take, or any individual, if they don't want to take support from the family, they want to build it on their own, then is that a wrong thought process?
No. That's absolutely fine. So when JP and I say family or friends and family, we don't mean your father, your mother, your brother, your uncle, your aunt. What we mean is your immediate. So let's say if you were at a stage, at an idea stage, early stage, you have a prototype, you've tested it. Now if you come to me as an angel, I'll say, I want a little more POS, proof of concept. I want you to have a monthly growth, month-on-month growth, and come back to me in 6 months. Now, how will you reach there? You will have to go to someone locally, to an investor who's local, someone who's a referral, because he or she will invest because someone else is saying, or you will say that we will give you a 20%, 15%, 25% lower valuation in the next round of funding. Your ability to raise money from all levels is what we are testing, whether we're able to do that or not. And what you tell us, oh, I don't think my father will invest, that's not what we are here. We are looking at, see, when we ask you questions, we know the answers. We are seeing how do you approach a problem? How do you intend to solve a problem? Whether you're able to do it or not is a different thing. I'm not taking money from my parents, let's say, but that does not mean that everyone cannot or should not. JP has. So what I'm trying to say is, and it's not about father, mother, chemistry between the family and friends. It's your intent and ability to raise small sums of money before you come for a larger sum of money. It is your energy, your confidence from within, your ability to do that, because come tomorrow where you are struggling, that is what's going to save you and me from that'll save my investment, and that'll save you your startup. That's what we are calculating and watching at that point. That's what I meant when I said that.
Agreed. Understood, Mahavir sir. Yeah, I think that helps answer my question, and it's a good way that in your past organization, if you're working in an organization and you have good relationship with senior executive, you can refer them. So that is the thought process which I always plan.
Absolutely. When we give you a certain name, we don't specifically mean that person. We're talking someone who's like that for you in your life.
Correct. Yeah, understood. Thank you, sir. Yeah.
Perfect.
Hey guys, quick.
Let me ask
question.
a couple of you. Hold on, just a second. There's a couple questions that came in earlier. Let me ask and answer those, and then we'll go to whoever's just talking. Okay, so Sharik had asked the question: does winning startup competitions count as money raised? So technically, yes. There are a lot of reputable incubators and accelerators that make a bigger difference than business plan competitions. For example, what's it called? Y Combinator is one of the most famous business accelerators in the entire world. It's based out of Silicon Valley, but it is definitely not for everybody. I think back in the day, you're basically living on their campus in their dorm, and you're eating, breathing, sleeping the business. And they're monitoring, and they're coaching, they're mentoring that whole process. So whenever they have their demo days, same with Techstars, same with a lot of these different foundries, I'm sure there's different ones around the world, there are going to be a lot of people that are going to be watching, because they know that these are the screened companies that have gone through their process. So an organization like TiE can definitely tell you we have active VCs, angel investors that are looking for deals, and those are the places that you want to go to, right? Because if you can get through their screening process, get in and pitch to the group, and you win the competition or whatever it is, a lot of real investors are going to be watching you and watching you for a period of time. I've seen companies, where 20 years ago, I wouldn't trust that person with 5 cents. But 20 years later, I've been watching them year over year over year, build different companies, try, fail, and they've learned the concepts. So by the time that they got over to me again, one, they had a relationship, there was consistency, they had communicated, they had gone out of their way to get my advice and built a relationship over time. So whenever they ask, hey, I need $187,000 for my new company that I'm getting started, I put money in, we've got the proof of concept, and we've got the ball rolling. They presented at a program in Atlanta related to what's called ATDC, which is a huge accelerator here in Atlanta, Georgia, in the US. As soon as they pitched, all these people wanted to invest because, one, they had been in the community, they were being presented by a reputable organization as a winner of a competition, and they had a lot of people who were real investors. So definitely winning startup competitions are definitely key if you get legitimate VCs that are involved with the process or angel investors. The money itself just really depends on the structure of the win. So it could be a grant, it could be a convertible note, it could be a safe note. We'll talk a little bit about different structures, but a lot of it has to do with the reputation of that group. The next question was something or other non-dilutive funding. Victoria, are you there? Could you ask that question out loud?
JP, can I just
Sorry,
add?
I was just adding on to Sharik's question of other non-dilutive funding like grants.
Okay,
perfect. Go ahead, Mahavir. You can answer on that.
Yeah,
too.
so I totally agree with where you win, what you win, who the judges are, who's judging you. But also you have to understand that endorsement of any kind, is always good, whether small, big, or authoritative. Also, the confidence level of you and your team obviously gets, it's psychologically better for you to work. You work harder, you pitch more money, you pitch for more to more people, your confidence level gets up. So of course I feel that winning startup competitions is always good, but of course, as JP said, depending on where you are, what competition it is, who's judging you, what the process is, very critical. Even on the non-dilutive funding, I think it's absolutely the same. If you get non-dilutive funding for now, which will be diluted later, or whatever that case may be, it's any sort of, someone who takes money out of his or her pocket to invest in your startup or in your idea or in your team absolutely is an endorsement. Whether smart or dumb is secondary. The fact that they trust you enough with their money, and despite having other options to invest, from stocks to mutual funds to other sources of investment, it is an endorsement. So anytime you're pitching or you have a business plan, you have been funded so much and so much, and that is an endorsement. One so much. So it's absolutely not only confidence building, not only gives you a runway, in a short runway, but also builds your confidence and your team's ability in itself.
Well, next question was, so how do you balance investment from family and friends, even if that's considered dumb money? That was coming from Victoria. Great question. So I've literally raised over $500 million in what I would call dumb money. Now, I don't call the people dumb. I think they're very close friends of mine, but all that means is that they're not sophisticated experts within that space. So just like Mahavir said, I would 100% take an intelligent investor who knows my space that can help me scale up rapidly over any unsophisticated investor, because their value add is so much more. Their legitimacy to the organization, they are a stamp by themselves. For example, one of the most reputable investors in Atlanta, who's been around for decades, invested in one of my companies, I can then now use him as a reference, just like Mahavir was saying, to all my other investors. But because they've set the terms, the structure, the deal at the get-go, we wanted to raise a lot more capital. So what we did is we used that structure and that reputation to lead the deal. Then we backfilled tens of millions on that deal with unsophisticated investors, because that group of unsophisticated investors, who were mostly angel investors, high net worth, ultra high net worth, they weren't experts in our space, but because that sophisticated investor put the stamp of approval by writing us a check, that helped us backfill that capital. So there is a relationship depending on the type and stage of where you are and what you're looking for. Mahavir, any comments on that?
Totally. You need an anchor, smart investor. After that, I love dumb money. Dumb money is the most, they don't ask questions. They go with whoever is leading. It's always great, but you need to have an anchor first. If you don't have someone who is the person that you need to grow, to need to have the next round, all dumb money is waste. So and it doesn't matter. There's no percentage. It could be 5% smart and 95% dumb money. It doesn't really matter, but that 5% smart money should be strong enough to take you forward. I would also like to, add on endorsements and to this money bit, that it's not just winning competitions. It's not just getting money from friends and family or small size. It's also many other things. If you have failed 3 times as a startup, it's okay. You're far more stronger than an MBA for me as an investor. If you have raised money in your previous startup or have had an exit, it helps. All these are endorsements. This will help you get smarter money. This will help you get money. This will help you succeed. This is where confidence and trust and everything gets involved. But you have to be ready with the reasons. Why did you fail? What were the mistakes that you did when you did fail 2 times or 3 times or once? Who was out of all the co-founders? I'm just, especially. So what you have to see, your roles, your team, and your analysis of what went wrong or what was right is very, very critical for me to get confidence in where you are. So all these are endorsements of sorts, and they help in one way or the other.
So we're going to skip a little bit forward, and then we're going to be doing breakout sessions here in a few minutes, and you're going to go through and take these bullet points, and I want you to pitch not only to each other, go round robin. We're going to have 4 breakout rooms, and then Mahavir and myself are going to be rotating through those rooms. So these notes right here, take this as you're condensing this whole pitch in your head for your company and your team. And we're going to do that in about 12 minutes. So I'm going to go through a couple of these points here. So just like Mahavir was talking about with references, I use my team as the reference. What does that mean? So I have been in so many companies and industries that I had no experience in. So why would anybody trust me to go build a company in an industry that I don't have any experience? Well, it has to do with I am really good at recruiting team. And not only just team, amazingly talented, seasoned team in industry that have already been through the phase that I'm in, meaning from if I'm in startup, if I'm in growth, if I'm in scale, if I'm through M&A, I recruit people as I'm getting to that stage so that whenever I talk to an investor, they don't have to talk about me. Yeah, I might be able to do a few good things, but really it's the team dynamics that creates that reference pool that Mahavir was talking about, so that you're bragging about your team and their track record and their experience, even though you may have none. Another thing has to do with just because you want to be an entrepreneur and start up a company doesn't mean that you shouldn't be getting a job to get experience. What I mean by that is a lot of the people that I've worked with and invested in, they had been working in that industry 5 to 10 years. So to some degree, they should have some sense of what the heck they're talking about, that I should be able to trust that they have the ability to execute from their idea. And that goes to this other aspect where there's a balance of being an expert in the product versus the business side. And they are not the same, especially during the phase that your company is in. I have worked with strategy consultants. I think they're some of the worst people to start a company, but some of the best people to help you scale a business. So just because you have experience in different industries doesn't mean that you're going to be good at getting the startup capital. You may have been used to big budgets, but do you have the sophistication or the team that can take you from the beginning stage as you scale? So one of our TiECon speakers in Atlanta, our keynote is Kabir Bardey. We have this magazine called Inc. 500, which is the fastest growing companies in the entire world and in the United States. And he was #1 with, I think, a 43,000% growth rate. He's a much younger classmate from Georgia Tech. But I was talking to him yesterday about his team. So early on, he had his idea. It's called OneTrust, if you want to check it out. And yes, he had been in the space at a company called AirWatch earlier that was in mobile device management security. So step one, he had experience and he knew the gap. Step two, after AirWatch got acquired by VMware, which is a pretty big company, the founders from that company saw Kabir and his business and that he was serious about it in their space. And they actually invested and came on board to help him grow that company. You want to talk about greatest credibility, that the people who just have helped you investing and are going to be on your team just sold their company for $1.7 billion. And, fast forward only 4 years in, Kabir's company is now worth over $2.5 billion. Why? Not because he was going to go and do everything. It has a lot to do with the team that you're building, business sophistication, product sophistication, and pulling that entire story together so that whenever you're going out to the market, you're ready to go. Mahavir, any thoughts and perspectives?
No, nothing to add. Absolutely agree with what you're saying. Great example.
Perfect. Last part on, showing the track record and what the opportunity is. If you're going to ever talk to a VC or sophisticated investor, do not come to them with a small opportunity. That being said, if they don't believe that you can execute on a big opportunity, there's no point in you saying how many trillions of dollars of a marketplace that you've got available to you. So if you go towards any type of business that you want to get professional scaled capital, you've got to have a massive opportunity. The reason is, those of us who invest like Mahavir, myself, Paul, a lot of other angels, we don't do all in on one bet. If you use the poker analogy, what we do is we spread our chips across a whole bunch of different bets, hoping that maybe one, maybe 2 out of 10 or 20 might work out to not only cover all the losses, but be much bigger. But in order to do that, you got to have a company that has a massive opportunity to be able to grow, scale, and have a potential massive exit or distributions or liquidity in the future from the investor's perspective. Now, you guys all know that, but if you can't connect the thesis of the investor with your thesis of the pitch, it'll never work out. Mahavir, if somebody comes to you and says, hey, I'm looking for $20 million, do you think you could invest that entire amount? What's the disconnect with them asking you that question?
Yeah, so I would never do that. And, I would, obviously co-investments, smaller ticket sizes, spreading our investments are a key. Moreover, if I had 20 million to invest as a single entity or as a group of investors who would invest behind me, I would start the startup on my own. I wouldn't need you. I would hire all of you. So it would never work. So it's all from your point of view also. I mean, to having varied investors from various geographies, various experiences, various skill sets will also help you in the long run, because you can reach out to every individual investor, 5 or 10. It's always good to spread it out amongst. It's only on follow-on rounds. It's only pre-Series A or Series A that you should go to existing investors or large funding houses for that kind of money. At early idea stage, at angel stage, I would spread my investments. As an investor, I would recommend you spread your investors across the sectors, across geographies, across experiences and skill sets.
Perfect. So we've got 5 more minutes, and we're going to start doing the breakout session. So get ready for that. So the last kind of component here that people are going to be looking for is the numbers. End of the day, this is not a nonprofit that you're building. You're doing a for-profit company. So people need to know what drives the business model for you to make money, right? Now, what you all know that. You've all heard that. You've all talked about pitches and your, your financial statements and, what are the KPIs. You know this information, but the key is crafting a story. So that is a critical component. One of the things that I do that a lot of people find very confusing in the early days is whenever I'm growing, I try to grow consistently. Now, that's very, very hard to do over a long period of time. What I mean by that is I try to upfront do as much as I can to figure out how this business is going to go. Just like every investor is going to be looking at your pro forma, you need to be thinking what are the different assumptions that you have that are going to drive this business and then carefully scale it up. So, for example, if you think it's going to go very, very slow, communicate that expectation so that the investor knows the perspective of time relative to your business. And it's okay that it takes more years to break even before your business scales up. Now, on the flip side, which is an odd problem to have, and one of my companies has this problem, is that we have a massive opportunity, massive growth potential, and we have the capital to do it. But we've been very consistent and careful so that there's not a lot of volatility in our growth, and we show nice consistency to our investors. Why is that important? That I would literally slow down our growth to have consistency over a long period of time. The reason why is any investor who's going to look at your numbers, your financials, your P&L, your cash flow statements, all these different metrics, they are looking for a reason not to invest more than they're looking for a reason to invest. Especially people like ourselves who do it consistently. I cannot tell you how many deals that I'm looking at on a weekly basis. To be clear, I'm an entrepreneur and I happen to do a lot of investing. But if I'm looking at 2, 3, 4, 5 deals a week that are coming my way, why do I want to invest in your business? Well, I need to look at a compelling story. I want to have a good relationship with you. I can trust who you are and that you can execute on this plan. And I'm not an expert in your industry. You've got to communicate the value, the ROI to me in a simple format that tells a story with data and information whenever it comes to these metrics. Mahavir, any perspectives and thoughts on this kind of data and information and financials that you present and how we should think about that communication?
So, just for all your information, all smart angel investors, all entrepreneurial angel investors are very, very wicked people. And that goes for both JP and me. I mean, we're and when I say wicked, what I mean is that our questions are not straight, our responses are not straight, our comments are not straight. I have never had, even if I've loved the idea or the team, I've never sent them an email saying, oh, great idea, I want to invest. I will ask them 5 different questions. I will throw, curveballs at them. I would want to see the tenacity. I mean, you have to understand that we are just being a devil's advocate. What if when this thing went wrong? So we look for loopholes, we look for gaps, we look for how strong you are on the idea, on technology, or as a team to grow. We are looking to find reasons why we should not invest. So imagine critics who would want to fall in love with you, but and we are all poker faced. To take the poker analogy further, we never get excited. We never show excitement. We can praise you because we're a mentor and wearing a TiE hat, but as investors, we're as cruel as one can be. So you have to understand, and all our questions are not straight questions. Sometimes our questions mean something and we're just looking at something else. You have to really understand that so long as you're honest to the idea, so long as your team and you are able and capable to invest in the idea, so long as you and your team irrespective of whether you get a funding from me or someone else, will continue to explore that idea and take that idea to public, a company that's listed on the stock exchange. If you are just looking to exit and make short-term money, trust me, we will come to know and we will find out. It's very, very rare, unless, and if you don't see the ability that you would be trying or working, we would not invest in you. You really have to feel it from within, and you cannot pretend to be what you are not. We will find ways and means. I mean, I've had great presentations, great market, great ideas, unique ideas. And I said, great. So what is the problem? You don't need me. Just you have a patent that's pending. I think you should just go to a financial institution, or go to a debt fund and get this for money for 1 year, because you have a great idea. You have 100% margin. You will make so much money that you don't need money in 6 months. And then they're like, what? So that's where, and then the debt funds will not fund you. You have to understand, you have to be realistic when you talk. You have to be realistic what you are. You have to be very, very fair to what you are, what your valuation should be. Not because you need 1 million and you can't dilute more than 10, 15 because the world has said so. So your valuation is 10 to 15 million. It doesn't work that way. Every number has to add backward, forward, top, down. We just go through everything, even if we go to a second or a third email situation with you. You have to understand, we are making sure that our money is safe, and we are betting on you at this stage. So you have to be what you actually are, and we have to make sure that you are. And that's where, what JP is trying to say is what we are looking at, and that will the only way that it will work for you.
Perfect. So we're going to stop there and do breakout sessions now. And we're going to still go through a bunch of these concepts for the next about 20 minutes. So what I'd like you to do, I know Amin and Paul is going to help with that, actually putting these rooms together. We're going to have 4 rooms. And what we're going to do is, I guess Amin or Paul, you'll be able to put the breakouts together, and then we'll have 4 rotations of 5 minutes. So we'll be able to go to each one of those rooms, and I'll be a timekeeper as well. So Amin, can you put those breakout rooms?
Yeah, it's on the screen as to which rooms they're going to, and we'll move you and Mahavir. You said every 5 minutes? Around?
Every 5 minutes. Yep. We just
So
want
you'll
to jump in. I want you guys to pitch each other's companies again. You've taken some of this basic advice Mahavir mentioned at the very beginning. I'm telling you, you got to practice pitching all day, night, every day of the week for the rest of your life, pretty much, to master the art form of pitching. So hitting some of those points, go through your breakout room, talk about what your company is, but hitting all those points, those 4 points that we talked about in your presentation to each other, okay? But keep it condensed, elevator style.
Because of the size of Clean Electric, I'm just going to ask them to be almost like 2 sides of the table, so I put them in one room. But otherwise, there's multiple teams per room.
All right, guys, the breakout rooms are open. Go ahead and enter into the breakout rooms as normal. You should see a notification on the bottom bar of Zoom. And once you guys are all situated in the rooms, we'll go ahead and add Mahavir and JP James into the rooms. And JP and Mahavir, to make it easier for me, because I don't want to move you in mid-conversation with any of the groups, if you could, when you get into the room, on the bottom of